When the market talks about the future of aerospace, everyone looks at the flashy drone startups and the multi-billion-dollar next-generation fighter jets. But there is a massive silent crisis crippling global logistics and national security right now. The world is running out of pilots. Commercial airlines are aggressively poaching military aviators, leaving the Department of Defense and global cargo carriers struggling to staff the massive transport planes that keep the global supply chain functioning. You cannot simply print experienced pilots, and building entirely new autonomous fleets will take decades and trillions of dollars. The immediate solution is not a new airplane. The solution is an invisible cockpit. You have to take a 40-year-old legacy aircraft and install a robotic co-pilot that allows the plane to fly safely with a drastically reduced crew. The undisputed leader in this highly certified niche retrofit market is Innovative Solutions and Support, ticker ISSC, sitting at a microcap valuation of roughly $490 million. They provide the proprietary autothrottles and avionics that are currently keeping aging fleets in the sky, and Wall Street is catching on. On March 16, 2026, ISSC triggered a massive technical alarm, becoming one of the top trending stocks on Zacks investment research. Today, we are investigating the mechanics of this breakout ahead of the end-of-quarter institutional rebalance. To understand why ISSC is capturing so much momentum, we have to look at their hardware integration. Their flagship product is the ThrustSense Autothrottle in legacy aircraft. Managing the engine power during turbulent conditions or complex approaches requires intense, constant physical input from a dedicated crew member. ThrustSense fundamentally automates this workload. It automatically computes thrust, holds selected speeds, and is designed to implement critical limit protections that help prevent engine stalls and overtorque scenarios. It essentially brings modern airliner automation to older, labor-intensive platforms. But the hardware evolution is accelerating. Management is pushing forward with their utility management system, the UMS-2. This is designed to be an advanced system integrated with neural network capabilities by bringing cutting-edge processing directly into the cockpit's monitoring and control systems. ISSC aims to significantly enhance crew efficiency. This technology is a critical stepping stone toward reduced crew operations and enhanced cockpit automation for a military contractor or a commercial cargo carrier. Retrofitting a legacy aircraft with ISSC's avionics for a fraction of the cost of buying a new plane is one of the highest ROI decisions they can make, while their in-house engineering is spectacular. A fundamental turning point for ISSC occurred when they executed a masterful strategic acquisition. They successfully acquired and exclusively licensed critical product lines directly from aerospace giant Honeywell. This wasn't just a revenue grab, it was a technological bypass. By integrating Honeywell's established platforms, ISSC instantly acquired the advanced technological architecture necessary for their flight automation initiatives without having to spend a decade in basic research and development. The financial impact of this integration has been staggering. It fundamentally transitioned ISSC from a scrappy hardware vendor into a primary systems integrator. We are seeing the highly profitable effects of this integration flowing through their financials. By successfully absorbing the Honeywell product lines, ISSC expanded its gross margins to a phenomenal 55.4% and dramatically increased its backlog. They opened a massive new market opportunity, gaining introductions to numerous operators and allied foreign militaries with whom they previously had minimal relationships. We are timing this deep dive very specifically for mid-March. To understand why, you have to look at the data signals that triggered over the last 72 hours. On Monday, March 16, 2026, ISSC triggered a massive momentum alert on Zacks investment research. The stock experienced a staggering 187.45% growth in page views over a 3-day period, landing it squarely on the trending stocks list alongside multi-billion-dollar tech giants. This isn't just retail hype. This is the footprint of institutional attention. The underlying technicals reflect this shift. ISSC has been on an absolute tear, gaining roughly 134% over a recent 12-week period and outperforming the broader aerospace sector by a massive margin in early 2026. The stock has recently traded near its 52-week highs. Furthermore, analyst consensus leans positive. Several analysts rate ISSCA by reflecting confidence in the company's trajectory. The market is aggressively pricing in their double-digit growth rates and strong return on equity row. The momentum signals are triggering screeners, and the volume is actively building. Timing is everything in the market, and mid-March presents a critical strategic window. We are currently sitting in the sweet spot of the financial calendar. We are exactly 1 week away from the end-of-quarter institutional rebalancing window. At the end of Q1, massive mutual funds, defense ETFs, and institutional asset managers often rebalance their portfolios to meet their mandate weightings, taking profits from their massive mega-cap winners and reallocating capital into high-growth, fundamentally sound small caps. ISSC is well-positioned to benefit from this institutional reshuffling. It is a highly profitable company operating in the defense and aerospace sector, a sector currently seeing massive tailwinds due to global geopolitical tension. By identifying this March 16th momentum breakout early, you can position yourself ahead of the passive index funds that may adjust their holdings next week. We aren't just chasing the daily news cycle here. We are breaking down the mechanics of the trade before the institutional algorithms finish their quarterly buying sweep. Every strong thesis requires a rigorous look at the bear case. For ISSC, the primary risk is the certification wall. The aerospace industry is arguably the most heavily regulated sector on the planet. ISSC is not building consumer software. They are building mission-critical flight systems. Every single autothrottle and flat panel display they invent must undergo grueling multi-year certification processes from both the FAA and the Department of Defense. If a software glitch is found during testing, or if a regulatory agency experiences a backlog, product launches can be delayed by years, severely compressing their revenue timelines. The second major risk is the nature of the retrofit business itself, tearing apart a 40-year-old military cargo plane to install. Modern digital avionics is essentially open-heart surgery for an aircraft. You frequently run into unforeseen wiring issues, legacy hardware, incompatibilities, and supply chain delays for obscure parts. Furthermore, they are carrying roughly $28 million in debt following their aggressive acquisitions. If the defense budget experiences a sudden contraction, or if commercial airlines delay their fleet modernization programs to save cash, ISSC's lumpy revenue streams could disappoint the aggressive growth metrics currently priced into the stock. Innovative Solutions and Support is a premier picks and shovels play for the transition toward reduced crew operations. They aren't trying to build flying taxis from scratch. They are dominating the highly lucrative business of modernizing legacy fleets to keep them in the air safely and efficiently. With their gross margins expanding past 55%, a robust product pipeline featuring the UMS-2, and massive data signals validating their recent technical breakout, they have transitioned from a sleepy microcap into a compelling component of aerospace growth portfolios. Are you watching ISSC ahead of the Q1 institutional rebalance? Or is the regulatory certification risk too high for your portfolio? Let me know in the comments. And if you enjoyed this deep dive, check out the KO-Fi link in the description. Remember, this is not financial advice. You're watching Stock Teller, where every ticker has a tail.